Want to see someone systematically disprove everything you have read about trading stocks and expose how and why you will consistently lose money if you aren't doing it right? Click the link in the description to check it out for yourself. But now for today's video.
The question, is trading at a price breakout the best trading strategy? Answer by Jace Bryson. There is no one best style of trading. Trading breakouts is just one of them. As Bahman Rasoul mentioned below, 80% of breakouts fail. And as Warren Gold mentioned, waiting for them to pull back before jumping in is a great way to reduce the number of whipsaws. Some traders also do some variation of the following to reduce what they lose when they're wrong. They buy the breakout, or wait for the first retracement, but only buy a third or a quarter of their final position size. Then every time the asset pulls back but is still higher than the prior entry, they buy another piece while moving up their stop loss. They keep doing this until they have a full position. I put up a post on Signal.ly about how to fail as a trader. Trading is a game of probabilities and sequence of returns. Systems run the gamut from trend following and breakout systems on one end that have low win rates but, hopefully, big winners to short-term mean reversion systems that have lots of small wins with losses that aren't too large. Stanley Druckenmiller said he only targets trades that will return 5x his money, so he only has to be right slightly more than 20% of the time to make money. But the only way a system like this works is if he has a bunch of small trades going at the same time, so he doesn't get wiped out with losses while waiting for that 5x trade to happen. Too many traders accept small wins and big losses. They trade positions that can permanently go to zero, and they compound the issue by using stop losses purely based on price. Even if 90% of your trades are profitable, the remaining 10% of trades that are losses can more than wipe out your gains. One of the best ways to approach trading is to master one style, and then another, and then another. Dedicate a portion of your trading account to each one you have mastered, because the returns for each style will all ebb and flow. Answer by Andrew Andrews. A breakout strategy is one of the best trading strategies, but there are others. A breakout strategy is really a volatility-based strategy. Price moves from low volatility to high volatility around a certain price level that's important to traders. So it's best to use volatility-based indicators to identify periods of low volatility, e.g. average true range indicator, Keltner channel, Bollinger Bands indicator. But other trading strategies are robust too. You can find many online, e.g. turtle trading. Good luck. Answer by Bahman Rasoul. North, 80% of breakouts fail. So the odds will be better if you trade against them than with them. But go to any of your charts right now and draw a channel and just count how many times price hits the channel lines and reverses back. Then compare that number with how many times it breaks out of the channel and keeps moving in the direction of the breakout. You might also notice how most successful breakouts usually happen on the 4th, 6th or 8th waves. Yet, I still advise you and anyone else to bet against the breakout rather than on it. It just makes more sense to go with the better odds than with a bigger profit potential.